Hi, my name's Marina, and I'm going to be talking about this Wall Street Journal article, Why Every Company Suddenly Wants to Become a Bank. This was written by Dylan Tokar and published on November 14th, 2025. So, in this article, we look at different companies wanting to take on banking ventures, how and why they're going about doing that, and reactions to these new activities. So, going into a summary of this article, what this article talks about, in the past year, 12 companies have applied to become national trust charters. So, trust banks are not traditional banks. They can't take deposits or make loans, but rather they're for the safekeeping of customer assets. The Trump administration has said they want to remove barriers to new payment systems like crypto, which encourages companies to venture into banking. Some companies applying to become trust charters include crypto companies like Ripple and Coinbase. They've said they will provide financial services to customers and issue stable coins, which are a cryptocurrency designed to maintain a fixed value. Retailers like Amazon and Walmart are also considering expanding into banking services and issuing their own stable coins. These companies are also looking into entering the banking sector through industrial loan charters. These are specialized state banking charters that allow companies to own financial institutions without having to follow the strict activity regulations and supervision of the Federal Reserve. They can help customers finance purchases and have been seen in tech and auto companies. There's quite a bit of pushback at these companies and their transitions into banking. Some say that approving all of these trust charter applications will threaten the stability of the financial system, as trust banks are not typically insured or regulated the same way as a typical bank. Many groups, such as the Bank Policy Institute, are urging the Officer of the Comptroller of the Currency to reject applications from Ripple, Wise, and Sony. There's fear and anxiety surrounding stablecoins, as some fear that major retailers will be able to provide their own payment methods and then cut out banks and credit card companies. Traditional banks also argue that industrial loan charters create an uneven playing field because these companies are able to do things that banks with traditional regulatory oversight are not. So, now we're going to move into how this conversation relates to financial management and to our course. These decisions are a big part of capital budgeting. These companies deciding to expand into financial ventures that they were not previously taking on will require huge investments as companies research and reallocate resources if they do decide to eventually expand into these areas. We've also discussed financial regulation and fears over these new national trust charters not being regulated in the same way as typical banks relate back to this. Critics of these trust charters say that since the 2008 and 9 financial crisis, regulators have been highly restrictive about who could launch a bank and what banks can do, and this has been for good reason. We've also talked about assets and diversification of assets. Could stable coins potentially be a new sought after asset that can help expand someone's financial ventures? Overall, I thought this article was interesting. I learned some new things about finance, especially cryptocurrency, and I hope you did too.